So good afternoon, everyone, and welcome to today's session in the Connects Americas webinar series, From Startup Grit to FinTech Glory. We're excited to have you with us for what promises to be a rich and inspiring conversation about the journey and building and scaling FinTech innovation in Latin America. Starting and growing a business takes vision, resilience, and execution, and we are very lucky to have two successful entrepreneurs with us today who have agreed to share their experience. For those of you joining us for the first time, Connects Americas is an organization we started with Daniel Ayala to foster collaboration and insight and opportunities across the Americas, connecting fintech leaders, innovators, and investors from Latin America and Silicon Valley to share knowledge, spark partnerships, and build the future of financial services together. I would like also to thank our board of advisors, Geraldo Bonilla, who is on the call today, and Victor Hunda. So they will have the opportunity to introduce themselves a little bit later. But also Carol Grunberg, who is the Chief Business Officer at UNO, and Patrice Perret, who was a successful entrepreneur as well, and who is now consulting for companies. We have also a special thank for our sponsors, 999 Global Ventures, for backing startups and global ambition. Paycademy.com, global learning platform for payments and fintech professionals, and the BP Forum, a long-standing community driving conversation at the intersection of innovation, payments, and commerce. Now, to guide us through today's discussion and introduce our fantastic speakers, I'd like to hand it over to my friend and colleague, Daniel Ayala. Daniel, the floor is yours.
Thank you, Daniel. And it's really been a privilege to be able to work with Daniel on this effort over the last year. We're actually about to turn a year old, and we can't start the event without sharing a little bit about our key goals and areas of focus. So we bring this audience with this content to you with the purpose of providing regional market insights, giving you access to expertise and insights from fintech leaders in the space, and also to bring together a community of investors and entrepreneurs that are in the process of raising capital, whether they're in the pre-seed level all the way to Series B, C, and so forth. We also, down the line, are looking to get more engaged into training, coaching, and advisory services. And, most of all, provide a forum for networking and collaboration. This is going to be, I think, at least our 8th or 9th event now. We've had different people presenting. This is the first time we actually have two guests joining for one session because we wanted to see two perspectives of the whole journey of being in the fintech space and launching two different type of use cases in actually two ecosystems that are different from each other. But the one thing they have in common is that they're in Latin America, and we thought we want to share with you this journey that both of these gentlemen had with their startups or are having today. So with that, we'll go ahead and get started. First of all, I'd like to introduce Victor Hunda. Victor Hunda is the CEO of OKY. OKY is a pretty interesting startup that started originally with gift cards that are delivered throughout the Latin America region. And he's got quite a journey with this because he's actually expanded now to do just about anything cross-border. It's really commendable to see the work he has done with OKY. He has held other roles in various companies, but OKY is definitely his capstone in the startup world. So we're really pleased to have you, Victor. I run into him occasionally in the Brickell area here in Miami when I'm in town. He's a local, but he's always on the road working out deals with different partners. So thank you for joining us, Victor. I also want to welcome Gerardo Bonilla. Gerardo Bonilla and I go back about 25 years. I met Gerardo when I was starting in the cross-border space back in 2003. And he at that stage was one of the leaders of a remittance entity based out of San Diego. And I was working at a Wells Fargo, running the cross-border business for Wells Fargo, and it was quite interesting to see how much we have progressed in the fields of payments and technology. Gerardo has since then run a number of startups. The most recent one is his engagements with the Adelanto card out of Mexico and Cacao card, which was a successful exit and eventually a sale to one of the largest card companies in Brazil and Mexico, DOC. Gerardo today is the chief revenue officer for DOC, based out of Mexico City. So it's really a privilege and a pleasure to have you both with us today. So we'll go ahead and get started. The format today, we'll have two presentations, brief presentations, 15 minutes or so for each. They're going to give us an overview of their companies and/or their journeys. And Victor's emphasis will be primarily on the journey of the early stage startup and some of his lessons learned and beginnings, as well as obviously sharing with us what his company does so we can demystify OKY for those of you who don't know it yet. But I will tell you this, if you have relatives overseas, you need to try his product. This is really outstanding. And then Gerardo will be sharing his journey in building a company and having a successful exit, and then the journey after selling the company. So I think this is going to be a very interesting session. Very excited to have you all here today. We are recording this session. We'll be broadcasting the session on YouTube, or rather place it in YouTube so people can refer to it. And also it'll be available for reference on LinkedIn. So welcome everybody. We'll go ahead and get started with Victor. I'll hand it off to you.
Sure. Thank you, Danny. And thank you, Daniel, for both for the kind words introducing what we do. I've sent the sharing option, Danny, because I don't have access to it, so I can share oh, there we go. Perfect. So before I get started, I figured I'd give you an intro to what OKY is all about. Danny was already very generous with the way he explained it, but I'll give you a quick intro and then I'll discuss a little bit about our journey. But to give you context, imagine you're traveling far from home and your kids are back at home with someone, with a caregiver, and they achieve something truly amazing. So you want to treat them to something special, maybe a pizza, just to celebrate that they achieved, an A in their math test. Easy enough, couple clicks, pizza arrives, kids are happy. But what if your kid is sick and all you can send is cash? And now that reality of sending that pizza, which was very easy with Uber, now becomes almost impossible when you only have cash to send. For millions of immigrants, that's the reality every single day. Even though they provide economic resources for their loved ones abroad, sending everyday low denomination expenses still inefficient, highly expensive, provides no control to how that money is going to be spent. So that was really what drove OKY to build a solution. So let me show you how OKY works. It's really simple. In this example, we'll send $8, which typically you wouldn't do in a remittance. We'll send a prepaid voucher for a local pharmacy. This is in Guatemala. So I'm in the United States. I'm sending this to my sister that's taking care of my kids in Guatemala. I'm going to send a Get Well Soon card tagged with the transaction I'm just going to purchase. And it's really simple. I process the transaction. I can pay with credit card. I can pay with PayPal, or even I can pay with cash. You can add balance over the counter at a retail network of stores in the United States. That balance is added to the app, and you send this transaction. This is the confirmation of the purchase, which you can also share it via WhatsApp. And the reason why we chose WhatsApp is because in Latin America, that's the predominant means of communication. So essentially, when I send it, it's sent via my WhatsApp conversation channel with my sister, thus raising the degree of trust that you have on what's being sent. When she clicks on that link, she will see the Get Well Soon card. She will see the prepaid voucher or prepaid gift card that you received that she can employ immediately at any Farmacia Cruz Verde outlet across the country. 50 quetzales is less than $8, which typically is less than the cost of sending $1 or $1,000 in a remittance. And she can see any other vouchers that she has not yet employed. So today we have over 1,500 brands already connected into the marketplace, where basically they can prepay for products and services across 15 markets. They can set anything as simple as a McDonald's Happy Meal to pay for groceries, gasoline, and pharmacy, as you saw. We knew remittances are huge markets, close to $1 trillion, yet despite the rise of digital platforms, the core model of remittances remains the same. You still send cash, they still have to go to a point of sale and retrieve that cash, and it's still inefficient and expensive. It was not until 2008 that telecoms started selling international mobile top-ups. This actually shifted the conversation from cash to product and opened new opportunities. It basically created a $12 billion market cross-border. And that's what drove us to build OKY. We believe that if telecoms can do that, why don't we do the same for other retail categories, groceries, pharmacy, gasoline, you name it. And our whole thesis was that we wanted to enable immigrants to support their relatives at home with ease, control, and dignity. That was really the driver behind OKY. So now diving into the story about OKY and myself behind this business, as I was introduced, Victor Hunda, originally from Guatemala. I'm an immigrant myself. I've been living in the US for about 12 years now, but I spent over 20 years serving underserved communities. I got to see firsthand how technology can really impact the societies that are left behind by the economy, meaning the base of the pyramid. And that's really what drove us to build OKY. We wanted to build a solution that could make it easy for the immigrant community to still support their relatives at home with the technology that they already had in their hands. There's a lot of this community that's already bankrupt, meaning they have access to debit cards or credit cards, but still there's a huge number of immigrants who still have to use cash. So that's how the business was started. We actually began with the app, which is what you just saw. And this is where we start about on the journey about the business. So we started with the app and we realized, there's a segment of the market, as I just mentioned, that they need to pay with cash. So we built those retail outlets that actually gave access to consumers to add balance to the app. But what we realized is there was a huge segment of the market that even though they have a smartphone, they're not comfortable downloading or using apps. The bulk majority of them, when they purchased the phone, they were getting a phone in which they had to pay for someone else to download WhatsApp, to download Facebook or Instagram. So they're not used to downloading applications. And this is something that didn't really come up in the initial studies that we ran. So that actually gave us an opportunity to evolve rather than pivot the business model, meaning we already had the stores connected to our system to accept cash in for the app. But essentially what we did is we gave the same stores the possibility of using the technology we had created for them to sell products and services over the counter at these retail outlets. And the other thing that happened along the journey was that we were early into the business in the midst of the pandemic. And a lot of the companies we initially onboarded into the digital marketplace we had created, which was unique across Latin America, they had an internal need for their own company locally for their employee loyalty and rewards programs. Typically, they would employ physical gift cards, but given the pandemic and what happened to the supply chains, they had run out of physical gift cards. So they called us up and asked if we could enable the possibility of selling digital gift cards for them to distribute to their employees. So while that was a third element of evolution of our business that we called the OKY business, which was basically a B2B solution that leveraged the original app technology, but instead of it being cross-border, it was from the employer to the employee, giving them access to all the content that we had. Essentially, they would send credit and the employee would use the technology of the app to make the purchases. So since we started the business model, we didn't really pivot the business model itself, but rather evolved and adapted to what we were seeing in the market, because it was not a straight line. We had some successes, and obviously the product that you see today is nowhere near the product we had when we started, but it gives you an idea of the journey and the evolution we've had. And the business model has remained the same. It has been growing over time. It's been on a constant trend. But we didn't manage to raise the funding that we wanted. And I'm just showing here from, a year and a half ago, this is our free cash flow production. So we C-strap the business. The first 3-4 years, you will see that the first yellow bar that is down, just expanding lower down in terms of how much money we were burning on a quarterly basis, which was huge. And we couldn't actually raise funding from VC. And there were 3 things that we learned in that process. The first one is the timing of your business. You need to understand what's happening in the market. We were coming into a market that was very active in fintech, but at the time, the sexy business model was all related around crypto, and we were not crypto. So a lot of the investors said, we love what you're doing, but it's not in crypto. And then we saw a shift because crypto declined in terms of appetite from the investor community. And then we started to see a shift that all of the VC money was actually flowing into AI, which we were not. And a lot of the money that was still being deployed was more on B2B models or SaaS models. We were a completely B2C business model. So we couldn't really get the funding that we thought we would get. And another thing that we learned is that you need to do your homework. Part of the reason why we weren't getting access to the right funding resources was because there was a lack of alignment between the business vision that we had and the business model that we had and the investors we were approaching. So we started, fixing that narrative, started focusing more on studying the investor heavily before actually going on the roadshow, because we failed miserably at that respect. We were pitching to investors that were more heavily invested in B2B models. They weren't interested in B2C. They liked what we were doing. They liked the traction, but basically their mandate couldn't allow them to invest in this type of businesses. And that actually gave us the third lesson that, you need to have grit. I was at a conference one day and I heard a successful entrepreneur who said, you see me today as a successful entrepreneur, but it wasn't an overnight success. It took time. And the one advice I would give to entrepreneurs in the room is that you need to understand that surviving is thriving. That meant that so long as you find ways to stay alive, a business that is very early, you're being successful. It's not an easy journey. It's not a straight path. But if you keep at it, you're going to find ways to break through the barriers of setbacks that you are facing. And that has been our story. Even though we C-strap the business from the get-go, we should be breaking even in this second half of the year. And that basically gives us control of our own destiny. We actually have decided to hold off in institutional money until we have break even. That way, if we raise money, we're going to raise to scale, but not to survive. We already created the conditions for the business and the business model to be successful on its own. But if we want to go faster and chase the opportunity at a greater speed, then we will go and raise money. The context of our business, as I said, is it hasn't been, as you can see, a straight line. It's had up and downs, up and downs, up and downs, but it's been up and to the right. This year alone, we should be doing about 1 million transactions and serving over 250,000 unique customers. So it's still not nowhere near the size of the market and the opportunity that we see ahead of ourselves, but it's still a successful journey. It hasn't been, as I said, a single straight line, but it's been a journey in which everything that we've been doing has been adding to the original traction, and it's been compounding. You can see it's a positive trend, and we are very optimistic about what lies ahead. If the future holds the way we stand, we started with Guatemala a few years back, almost 5 years ago. Then we started expanding to El Salvador, to Honduras. Now we're starting to venture into Dominican Republic as Mexico. And what really lies ahead for us as a business is consolidating the product that we have. We are adding new features to the solution we've created. We're expanding the offering, meaning we're expanding the marketplace and obviously expanding the markets that we're serving. We have content not only in these 5 markets, we have content for 10 other markets. But given that we're research constrained, we have to focus on very specific core markets that are really building the foundation for that financial capability that I was discussing, which is the third element. Having the resources to ensure that we have enough cash to sustain the business for the long term is really one of the focus that we have beyond 2025. This should be the year where we break even our our cash flow position, meaning we stop burning cash on a monthly basis, and we start to generate our own funding. And that, in a nutshell, is a story. We believe OKY is solving a problem that has, a global footprint, because there are immigrants from all the corners of the world. We believe that OKY can be a global endeavor, but we've been patient in building our business, building the right foundations, and making sure that, whatever it is that we are going to invest time, money, or attention from our perspective has to be something that is perfectly aligned with that idea of, reaching that position where we have financial sustainability on our own, so that gives us better leverage to explore possibilities of accelerating growth. So in a nutshell, that has been our journey, Daniel and Danny, and for the audience, I don't know if you want to open up the floor to any questions or.
Perfect. Thank you, Victor. Outstanding overview of your company. Really gave us a good overview. For those in the audience that are on the call right now, you may type your questions in LinkedIn as a comment, and we can see the LinkedIn comment come through. Those comments will be erased after the event, so you don't need to worry about the questions you're asking. You can ask anything, but just you have to do it through the LinkedIn, and we're monitoring the LinkedIn for those questions. While we look for that, we do have some initial questions that we have ourselves. First of all, I gotta ask this: what does OKY mean? OKY.
That was the first question we got when we released the business, and my partner says, "So OKY means everything will be okay." But in reality, we're using the journal jargon that was being employed by the millennials in the chats. When they reply exactly that, that's fine, everything's fine, they use the word OKY. And we like the word that you could employ the same in English, Spanish, and French. So you can pronounce the word exactly the same in 3 languages, with the whole idea of starting with the end in mind. As I mentioned at the end, we do see this as a global enterprise. So you wanted to build a brand from the get-go that could be easily expressed in any language.
It's strong because it's short and sticky, right? It's easy to remember. So, okay, good. Thank you. And then, that was a softball. So now I'll ask questions. So in terms of your, I loved your quote, by the way. Surviving is thriving. And actually, as a founder that I am on some ventures that I have on my own, I would tell you, there are those days where the day ends and you feel like you're failing, but you're really surviving. And I love the way you put it: surviving is thriving. So I think let us stick to every entrepreneur's mind that's listening to this event today. I think is a strong message, Victor. We appreciate that. So now, in looking at the whole sort of, you're kind of operating in the intersection of cross-border and digital commerce, right? I mean, you're doing both cross-border payments and digital commerce. Can you share a little bit about the outlook for that crossroad? I mean, I always said that the frontier was that eventually those two things would merge. So you're trying to merge that, but where do you see it today, and where is it going? What's the outlook?
Sure. So let me just correct you one thing. I would love to take credit for that quote. It's not mine. I heard it from somebody else.
Okay.
But you're right. The feeling as an entrepreneur, and this was another friend who said, "Are you sure you want to do this? Because you're going to live between euphoria and panic every single day. There's no in between." And he was right. With regards to your question about the outlook, you're right. We are between sending cash, which is not, you cannot, take the voucher and ask the cashier to give you the cash, rather they will give you products. Otherwise, the solution doesn't work for the retailer. What we are seeing recently that's quite a shift is that even though crypto has had its ups and downs, you do see stablecoins becoming a relevant player in this space. What do I mean by that? You're going to start to see solutions come about where there will be peer-to-peer transfers, where individuals will transfer value from one, digital account to another digital account. It is quite likely that it will be enabled by the likes of Visa, MasterCard, or American Express to enable those rails to actually tap into that stablecoin, and they will carry the compensation between fiat and crypto, that stablecoin. and allow the consumers to actually use the cards with the funding that they receive cross-border. And instead of retrieving the cash, hold that value digitally and employ it at the cashier. That is something that we're seeing. Just a few weeks ago, PayPal actually released PayPal World, where they actually alluded to the fact that they're going to enable Venmo to be accessible to all PayPal account holders. That will obviously release a lot of resources that are currently, captured in PayPal accounts, and they can start transferring like Venmo, just like texting value between Venmo accounts. So I think that is the trend. It's going to be more peer-to-peer, and a lot of it will continue to stay digital. But the one thing that we've also learned is that consumers on the receiving side, they still need the cash. I mean, it's fantastic that I have the capacity to use a Visa card, but if I go to a market and the market is not ready to accept that means of payment, then I'm stuck. I still need the cash. There are a lot of entrepreneurs who are working to solve that problem. Some of them very successful. Like I think we have a common friend in Adolfo with Clip in Mexico, who has really created that infrastructure to allow access to these means of payments in lower economic environments, not traditional retail, but rather going to that mom and pop to accept those solutions. So I think over time, that's where the market is headed.
Excellent. One other question, as it relates to your business model, you started with gifting and then you diversified into remittances, correct? What have you seen as you enter the remittance market, which is highly competitive, right? I mean, every week there's a new remittance company that wants to get 0.5% of the market because it's huge, right? So how challenging was your entry into remittances, and without giving away too many secrets, how successful have you been, and
Sure.
have you learned something that you didn't expect to learn in that journey?
Well, we do have access to remittance, but we don't actually carry the remittance ourselves. That was part of our learning. Venturing into a market has a lot of complexities that we didn't want to tamper with. Regulatory, KYC, AML, you name it. It's a complex industry. There's a ton of players in the value chain, and it's not simple. Essentially, what we did is we have replicated the same idea of the marketplace that you saw in retail, but for remittance companies. So what we're doing is, rather than us being the remittance carrier, if you will, we are actually connecting remittance companies to our application. So it becomes like a convenience for consumers where they can have a one-stop shop. I can buy products, I can buy top-ups, I can send cash, I can pay for utilities. Everything in one single application. That's really what we created. So
You're
we
basically
didn't
a
actually delve
gateway.
ourselves into touching the remittance money directly.
Got it. You're basically a gateway for that, which is great. I mean, it's a good way to diversify your channel. And last question coming in is in terms of the raising capital, from your perspective as a Latin American fintech, although you're based in Miami, but you really are perceived as a Latin American fintech in many ways. What would you say was the biggest challenge you faced when pitching to investors?
It's taking those nice no's. What do I mean by nice no's? Is your business model is awesome. Keep up the good work. We love your product. We love what you're doing. We love the space, but we didn't get the checks. So you have to keep at it. That's what we learned is that even though the market size is big, as you pointed out, there's many companies trying to venture into remittances. So what they said, it's another remittance play, and it's we've seen so many of them and go belly up, and even though we obviously took a different angle, we're sending value via product remittance. It's not cash remittances. I think, as I mentioned during the presentation, it's having the right timing, the right alignment with the investor, and just holding your ground. I mean, if in our case we have conviction into what we've built, I think with a lot of the investors that we actually pitched, I don't think they disliked the idea. It wasn't in their mandate. It was just that we were not in the right alignment in terms of the timing horizon that they have for the return to their investors, the type of space they're looking to invest in. So the one thing that we learned is you have to do a lot of homework to really, really understand who you're pitching to. And then it takes a lot of practice because, when I see where we start and where we are today, when we pitch our business, it's night and day. I mean, we were very optimistic at the beginning, started getting somewhat frustrated. Then we started to understand that, this is just the conditions of the game we're playing. But that's where the concept of surviving is thriving. We kept at it. We start finding new solutions to evolve the business that we had, started gaining traction, resources, and all of a sudden, we're on track to be in control of our own destiny.
Great.
As I mentioned, we did strap the business, so we got money from third parties, but it wasn't institutional money. It was business acquaintances or friends from the business space that they believed in the business that we were building, and that's what's gave us the resources to get to where we're at today.
Good, great. Thank you for that, and Victor, congratulations on being very near to being profitable. So we look forward to having you back, hopefully within a year or less, to hear how the journey is going. I know I'll run into you in a cafe here in Miami, here and there. So look forward to seeing you there or somewhere in Guatemala in many of your travels. So with that,
Perfect.
Victor. Now, Gerardo, as we mentioned when we introduced Gerardo, so I know Gerardo for a long time, and I remember in one of my trips to Mexico City in the mid 2000s, getting invited to his fancy office in Mexico City in a very high skyscraper with an amazing view. And he pulls out Mi Adelanto card and says, "This is my new thing." And if those of you who know Gerardo, especially in his earlier years, he was the most aggressive and kind of progressive entrepreneur, always bubbling with ideas and new concepts. And sometimes you had a hard time keeping up with him because he was so ahead of other people thinking the way he was thinking. But that became a hit. And I'm very glad that you agreed to share the story for Mi Adelanto and Cacao Card, and you did a successful exit on that. So Gerardo is going to share the story and a little bit of the journey of both companies. Obviously, those companies are no longer out there. They've been acquired. But Gerardo is actually very successfully positioned today at DOC as a Chief Revenue Officer. So Gerardo, I'll hand it over to you to give us an overview. And thank you, Victor, so much for your insights. We appreciate it. We'll have a short period of Q&A at the end with both. Obviously, we'll have a few questions for Gerardo as well, but let's go ahead and get started, Gerardo.
Super, Danny. Thank you very much of your words. Daniel, great to be with you as well. And Victor, fantastic presentation. I get excited just to listen that stage where you are, and it looks really good, really good. Congratulations. I'm happy for that. And yes, well, I think the idea here is to share. I think it's part of my commitment with all the entrepreneurs that are really seeking for this. How can I share? Sometimes are the good and also the bad times that we passed. As Victor said, it's not enough of all the effort we do in order to our solution into the market, raise funds, etc. So I will tell you a little bit, probably going to be more focused on, of course, about these two companies. Mi Adelanto was the first one. Mi Adelanto was the first company right after I sold El Camino, which was a money transfer company in the US. When we sold that company, I practically got no job and started looking of things to do in the US. And then this group of American investors came to Mexico and wanted to develop a instant payday lending, payday advance solution in Mexico. That was a time where the payday loans were struggling in the US because of the regulatory and the high rates. And they wanted to come to Mexico. Of course, was a big challenge on how we're going to put that same business in Mexico, but very different at the end. So we adapt the business to have a different technology, because in the US is practically your paycheck and kind of an ATM. And what we did is we were looking to have a little bit more technology side, using the cards that will be a very safe vehicle for them to request advances from their companies. Instead of being like open to the market, we go directly to the companies and we issue them a solution where they can access to cash 24/7, anytime. And well, now that when I was writing this and remembering, we use IVRs. That was a technology that we were using to give access 24/7 for the people that can go through the telephone and identify themselves and bring a piece of their future payment into their card. So I think it was a extremely great idea, fantastic. And we struggle a little bit with the scale. Since we changed a little bit moving from the companies, we start struggling a little bit in the scale or on the size that we needed to trigger in order to make it a lot more attractive. So that was a time that one of our shareholders, they had a lot of companies for payroll, and they have the traction. They have over 60,000 people enrolled, so that make all the difference for them. And that was the time when they acquired the company. We got acquired, and it makes sense for them because technically it was good, technology was there, cards was, but the market was the important thing. So at the end, one of the shareholders practically acquired all of us and move along with Mi Adelanto. No, it was I think a great solution, a little bit ahead from time, as Danny mentioned. Sometimes it happens a lot when you're entrepreneuring. At the end of the road, you will see that you were ahead, and it's just I think it's unfair. At the end, you feel really like, come on, but it's part of the game. It's a challenge that you will have to find, and when you really find that you're ahead, you really need to find a way to get into the present time, no? And that was Mi Adelanto. And following from Mi Adelanto, that we were talking about cards as a technology piece for payments or cash to use. Then it came Cacao, and Cacao was really, the stars were aligned. That was the perfect timing, different than the other one that was ahead. This was the perfect timing. It was right before the Fintech law in Mexico was released. So we were in the perfect time and the perfect moment to come, because there were a lot of technical projects, super tech guys outside, really looking on how can they financially include the people. And it was practically everything right there. And then the Fintech law came out. So we were in the Octavo Transitorio, a transitory article that covered us, where the regulator was looking on how these businesses can roll out in Mexico, how they're going to be regulated, because practically we offer the technology, as today is known as banking as a service. So you offer that technology in order to give them that solution, and they will practically put their own colors, solution, service. And one of the most incredibly results that we received is that we never had one problem with one client of our clients. We didn't have any claim, one claim we didn't have. They were really taking care of their clients. They were thinking about their offer, and every offer was different because we have competitors. All of our clients were direct competitors, and we never had any. You will never know that we were in the back. So I think Cacao, it got this specific and unique situation in time, in the market in Mexico, the card part, the processors that were also ready to offer these kind of services, and they were not ready at that time to serve this market of very fast technology-driven companies. And we were there. We were practically that last piece that we can serve all these companies really fast, tech to techs, and that was the boom. No, when we started, but now talking a little bit about these two companies, that at the end the technology was our flag, our main flag, that we wanted to be the differentiator between us and other companies. When we were building up this company and everything, and this is the piece that I want to share with probably everybody here, it was not only our, I don't know, the energy about having our product and the clients, etc. We as a businessman, entrepreneurs, we needed to have an exit. And that came when we started thinking about, we need to raise money. We were really profitable, but if we wanted to grow, we wanted to go to different countries, and that's a time what you need to do and not stop. So then I started opening a round of investment and start talking to VCs. That was the first time in my life talking to these formal investors, and really trying to understand what they want to listen, what they want to buy, because it's a betting. They are betting for your business, no? So you needed to be very precise. We hired a company that can help us and coach us, which is important, on how to present this offer to the venture capitals, and that was, I think, the first step we did, and the first thing I learned. And they asked me, it's, what's your exit? And probably when you're working hard and selling your product and everybody's happy, you probably are not thinking that, but you're not a family company. You needed to have an exit. You need to have an exit. It could be if you sell it or not, but everybody that is in your company, even those some employees with stock options and everything, they don't want to keep the stock. They really want to have an exit. So that was, I think, a big piece that I learned from there. And I think everybody should be really, really focused on that way to drive you, no? Because let's say our drivers was financial inclusion, the technology, how can we simplify these payments, how these kind of companies with this technology were really financially including a lot of people in Mexico, and the people were really liking and the way technology can make them open an account or make them have a credit card. It was not it. We needed to really have this challenge on how we need to have an exit. And the exit with a venture capital is very different than selling your company. So you will need to have very clear on how responsibly you need to sell this thing, because at the end, if venture capital or the company that will acquire you, you're going to be the guy leading the company and need to bring those results in. So the journey started there. We start building all the documents to share with the VCs, and every time you go with them, it's like America's Got Talent. We needed to be with super energy, and sometimes it's the sensation is sad, because you really felt like, no, this was not good. They didn't like it, and sometimes they like it and they say they love it, but they don't invest or they don't move on. So I don't know which one's worst, but you needed to keep going and going and going and learning from every stage and from every VC. You learn something. I should have approached this in a better direction. I should be more focused on this, or not expecting that amount of money, or what's the real piece of the company that they want to acquire, and how many future steps will be for them to keep investing and not to dilute myself. So one recommendation for everybody is really to coach, to have somebody that can guide you on how to structure your offer to venture capital firms right there, because it's not easy. It's not easy, and you have to understand that these guys are betting for your company, and the bet of your company, it's a home run. They are not going to bet in a very stable company or something that will not put the ball out of the park. So it's important to have that and have the responsibility that you really have that vision that you're gonna get there, no? So in our case, when we were doing the practically the round for investment, a couple of companies approach us directly and say, we saw your documents from family businesses that they have, and are you guys open to talk about a different strategy here that we can acquire you 100% and you can probably come with us and continue the project? And that was the time. And in my opinion, that was fantastic to us because we really need money and technology. Those were the two things that worried me up, like the technology piece, because now we were playing with the big guys in the block, and we needed that. And money, it's always good to have in the pockets because we were really profitable. We were really profitable. We got the company was profitable day one. So we needed to have that partner inside the company that can take us to that next level and will make sense for both. So that was practically the time where we met in this guy's dock. These are jiu-jitsu Brazilians, which I personally like them a lot. I like the Brazilians a lot. And these guys, it's a very big company, but they act practically like a startup. Out of the box, they are super aggressive, move really fast. Technology is incredible. And the way they want to approach the market is really fresh. It's really smart. The founder, Antonio, is not only a very smart guy, but he's an extraordinary man. And his vision, it's beyond any frontier, not only money. I think his financial inclusion addiction, it's something that everybody in this company is drinking. I am almost 4 years with them. I'm very, very happy to be part of them. I've been treated amazingly and learning a lot from being an employee. This is the first time in my life, but I'm an employee entrepreneur in here as well. So they let my wings to keep growing and happy to do that. So I think my sharing with the audience today it's exactly that, to win the battle before you started, to really put together these pieces in order to have those strategies in place and be ready for that. It's going to come. Whenever you start getting that success and traction and you have the ability, like Victor, of moving now other countries, different products, the shape of your business will need to be changing as a chameleon all the time, but never to lose the north of your point. So I think it's amazing. It's great, but guys, you really need to have that focus always on the strategy. If you look at yourself, you really want the money in your pocket. And of course, all the rest is fantastic. But everybody that will invest in your company, they want to invest in somebody that will cash out in a certain manner in the future aggressively. So I think on this, Daniel, Danny, Victor, I think there is some time for questions inside and from the audience. So happy to share. And
absolutely. Thank you, Gerardo. Really great insights. A very nice compliment to Victor's trajectory. He starts the story and the journey, and you're closing it out very nicely, and really great perspective. In terms of start with the exit in mind is what I'm taking away from you. And I'll be frank, most people that create a new idea, they have a vision of what they see, what they want to create. But I haven't seen many people say that early in the journey that they have a vision of what the sort of sunset of that journey will be for them. And for the company. And I think that's an important question to ask yourself. Otherwise, you don't know what the end destination will be, right? And there's always, everything comes to an end at some point in time, or a closure or an exit, right? So I think it's an important point to make. But having said that, and again, thanks for the overview. Let me ask you a question. I'm not going to ask you a softball question because you have you've gone through the hardships from the beginning to end. So I'm going to ask you a tough question to start with. What was the hardest decision that you had to make as a CEO in your company. When you think back, what was the toughest decision that shaped the future of your company? When you think of Cacao Card, or if you want to talk about Adelante, what was the toughest call you had to make that you look back and you say, those were tough days?
Well, I think definitely when you raise money, when you bring a new investor, a new partner in the company, I think that's a tough one because it's a new player inside the house, and sometimes you really need to be very careful on that decision to make who's going to jump in the company and help you taking decisions, to really select somebody that can give you vision, strategy, and most of the time support. It's really important that, because sometimes you really feel like you're getting weak, and from nothing this good partner comes and say, don't worry, my friend, we're just a couple of minutes to get there, so cheer up and let's review. So I think whenever you're going to have a partner or investor, be very careful on what kind of partner you select. It's practically a journey, a complete journey with somebody that you will share a lot of things. Most of the time, I can tell Victor can spend more time in OKY than in his own house, even though the weekends. That's part of the deal. That's part of what we did. So that one is really important for you to know, that whenever you bring somebody in, it's not only the money, it's also the consequences of having somebody that can bring you more or can take you more. It's right there. I think that's a very tough moment, and important, because whenever you have the need of money, sometimes you don't evaluate these things so right. But I think that I recommend that to be very careful on that.
Yeah.
And patience.
Good advice. Now, when you look at, in some ways, you were at the right time with the right product, right? Based on what you shared, especially, at the outset of Cacao. Now the market is a lot more overcrowded, but I had a very good takeaway from what you said, and say you're working for a company now, Doc, being that their financial inclusion, they're hooked on financial inclusion. It's a financial inclusion addiction, you called it. Brazil is very developed, and Mexico is also growing very quickly. There's fintechs coming out of the woodworks every day all over the region now. 10 years ago it was less crowded. Interested in your perspective of the outlook for fintechs. I think we've gone past the sort of tougher days with the Silicon Valley debacle, and investors shying away from the region. I think investors are coming back to the region now, but they're still very shy about it. And one of the questions actually is asking, what advice would you give entrepreneurs who have ambitions internationally? I mean, some of the investors are primarily in Silicon Valley and New York, and some of them don't even have a passport, right? So how do you tackle that? And this is really kind of open-ended to both of you. But when you look at it today, and being where you have been before, how challenging is that, finding those investors that are not necessarily in Mexico or in Guatemala? They're sitting in the US, and they may not have access to you unless they're watching something like this, or unless they're very savvy and understand the region. Any advice for founders?
Yes, of course. I definitely, it's a great question, Danny. I learned the hard way that piece, because I got it like 2 or 3 different venture capital with practically offers in their hands, but they told me I need a local venture capital in Mexico to follow. We need a leader in Mexico And that was the first challenge. And it's right, because these guys they love the project, everything, but they wanted to have somebody in your own country that could be the so I think that's really important. I think it changed a little bit from time to time in Mexico. The kind of fintechs also changed, but it is very important that you look for a venture capital or investor locally that will be practically your leader on that round. And if they feel that comfort in the same country that you are, the rest will be easier to join in, very easy, or not that hard to join in, because the VCs from outside of Mexico are a lot more aggressive on their investment, of course, Silicon Valley, but and it makes sense, no, to enter into a different country, not only the local laws, but also the people, no? Do you know this guy? What is he doing? And if you guys invest and get into the project, the rest will jump in. That was the first challenge and it was not easy. It was not easy. We start selling now back to the Mexican VCs and start understanding how we wanted for them to be the leaders in the round. And not all of them wanted to be leaders.
Yeah, I could understand that. Victor, do you have a perspective on this?
Oh, I absolutely agree. To Gerardo's point, at least in our experience, when we've spoken to a lot of VCs, we started with Guatemala, and I think that was part of the turnoff, because when you talk to a American investor, when they think of Latin America, they think Brazil, Mexico, and the rest. But if you start with a small market like Guatemala, it's like they don't even know where to find it in the map. And when they look at the size of the economy, it's tiny. Even though when you look on the remittance space, as probably Danny, you know that better than anyone, it's the second largest corridor after Mexico. I mean, it's huge. It's over $20 billion a year. So it's not the economy, but the amount of value that's being sent. But conveying that to the investor didn't drive a lot of confidence. And I think Gerardo's point of finding a local investor is critical. And in our case, the way we saw it is we're building OKY actually for Mexico as as a target market, if you will. So we have to go after the Mexican investors in the near future as local investors to lead the round to really take this company to the next level. For sure. For sure.
Great. Well, we're at the hour. Really appreciate your candor and your openness to the questions we're asking. So we appreciate both your time. Thank you, Gerardo. Thank you, Victor. Really appreciate your time today. And this is being recorded, so and will be available on LinkedIn. For a while, so people will be able to see these beyond the people who attended the event. It's very easy to access, and also we'll have it on our YouTube channel. I'm going to hand it over back to Daniel, who will do the closing today. Stay tuned in. We're actually going to be having a session on the future of stable coins and cross-border in the next month. So look out for that event announcement pretty soon. We're very excited about that. Yours truly will be focusing on that discussion. So we're very excited. Look for that announcement. And with that, I'm going to hand it over with Daniel. Thank you, Gerardo. Thank you, Victor.
You're muted, Daniel.
Thank you for telling me. So thank you all for joining us, and thanks, Danny, for passing the mic. So we were lucky today to have a full cycle from a very early stage to an exit event, which is always a good experience for entrepreneurs. The scaling also across borders is not something that's very easy, and Latin America is a good example of what can be done in this aspect. So a huge thank you to our speakers, Victor Runda and Gerardo Bonilla, for sharing their insights, experience, and wisdom. It's always good to have first experience on this. As I said earlier, at Connect Americas, our mission is to bridge ecosystems between Latin America innovation hubs like Silicon Valley. And today's session is a perfect example of how powerful these connections can be. We also want to give a thank you for our sponsors, 999 Global Ventures, Pacademy.com, and the BP Forum for helping make this platform possible, and our advisors as well. So this is just the beginning. We invite you to stay connected, as Danny said earlier, with us. Share your feedback. Keep an eye out on our upcoming webinars and events. We have 2 tracks right now, the go-to-market and also having the experience of entrepreneurs who successfully created their ventures or grew their ventures. We'll be digging into other topics. We mentioned stablecoins and cross-border, which is, I think, heating up. More and more people want to issue stablecoins nowadays, so that's an interesting thing. And if you are interested in participating in Connects Americas, let us know. We are welcoming all the help we can get. And if you want to speak or want to hear about something in particular, leave us a message. You can follow us on LinkedIn at Connects Americas, and you can also see our previous sessions on youtube.com/@ConnectsAmericas. Until then, keep building, stay curious, and let's continue shaping the future of fintech together. Thank you, and see you next time.
Thank you.